Greetings traders. In this video, I'm going to be breaking down the exact ICT strategy that I use to secure $1,600 on this trade, but also the strategy that I use to get funded and make several $1,000s a month. So if you're still haven't found a profitable strategy, this is the video for you. It's very simple. Anyone can do this strategy, and ICT himself has said that you can quit your job in 90 days simply executing this strategy and this strategy alone. All right, so this is called the Judas swing, or this is how I use the Judas swing. It works on indices, it works in Forex. I just prefer to trade the NASDAQ and the NASDAQ only. So how this setup works is that you want to mark the high and low between midnight to 8:30. So this is midnight right here, and this is 8:30 right here. So I've already marked out the highest high between midnight to 8:30. That's this point right here, and the lowest low at this point. Then at 8:30 is when the fun begins. You're looking for one of the sides to get violated, or it's referred to as swept, right? So I don't do anything until price sweeps one side. So right at 8:30, we had a sweep of the London highs. Now I'm on the 2-minute chart. You can use this on the 1-minute chart, on the 5-minute chart. It's just up to personal preference. So we got a sweep of the London highs. So that's check number one. Now check number two is that we're looking for a market structure shift with displacement. And market structure shift is the same thing as change of character, is the same thing as break a structure. So basically what it means, since this is a short scenario, we're looking for the most recent swing low. We're looking for the most recent swing low before the liquidity grab, or before London high was swept, right? So it's not one of these. This is a swing low, this is a swing low, this is a swing low, this is a swing low. This is the lowest point swing before the highest high was swept. So now we need a candle close below this yellow line right here. So a lot of people get this part confused where they start looking at, see how we wicked this lower low? That's not a market structure shift. You can get faked out really easily if you wait for that. Again, this candle didn't close below this yellow line. This is the candle that closed below the yellow line at 8:52. Perfect. So that's a market structure shift. The next thing we need to make sure is that the market structure shift has displacement. So what do we mean by displacement? Displacement can also mean imbalance. It can mean FVG. It can mean gap. But basically, we're looking for an area that has not been filled by the market. So as you can see, this market structure shift did create a fair value gap right here. So you know it's a fair value gap because it's a 3-candle pattern. So that one candle, 2 candle, 3 candle, and the lowest low of this candle did not interfere with the highest high of the 3rd candle. So the market has left this huge gap that it needs to come back and fill. So that is the second step. We swept the highs and we had a market structure shift with displacement. This candle right here is the gap. The next thing that you want to do, if I can get it, is you want to enter on that fair value gap. So the gap is, I'll mark it, it's from here to there. This is our gapped candle. So you would want to put a short position on the bottom of that fair value gap. And next, we're going to set our stop loss. I mean, you'd be wanting to know where you put your stop loss. Now, the most conservative place, and ideally the best place to put your stop loss, is right here, right? You want to put it on the candle that displaced, or the FVG pattern that displaced. So remember, an FVG requires 3 candles. So this is the first candle, second candle, third candle. So you want to put it on that candle right there, right above that high. And then take profit is pretty simple. You want to do a 1 to 2 risk reward. So we have that right there. And yeah, stop loss with 1 to 2, target 1 to 2 RR. So you see price, we had a market structure shift, price goes back into the gap. Now once price creates a gap, basically it needs to come back and fill that, but then it's going to continue shooting off to Since it's already swept this London high and it's giving you a market structure shift with displacement, price is going to reach for the liquidity on the other side. So, like I said, this setup happens 3-4 times a week. And really, because there are so many confirmations within this checklist, it's all you need to get funded, because it's not going to give you a lot of fake signals. Sometimes, you will get some fake signals, especially on the 1 minute time frame. That's why I prefer the 2 minute time frame. But it's really just that simple. Wait for a higher low to get swept at 8:30, then wait for a market structure shift. That market structure shift needs to have a gap. Then you enter on that gap, targeting 1 to 2 RR with your stop loss be hot, covering the 3 candle pattern that created the FEG. That's literally all I do. I do it 3 or 4 times a week, and that's all you need to get funded. That's all you need to start printing money and quit your job and do whatever you want with your life. If you have any questions, drop them below, and I'll see you in the next one. Oh, and also I use this to make $1,600 on the NASDAQ on February 15th, 2024. All right, peace.